Stock slip after a firm open. The Nifty and the Sensex trade near the day's low ahead of the weekly F&O expiry. FMCG and auto eke out gains while the financials as well as the utilities dragged today.
Bajaj Finance takes a beating after it posts AUM growth below estimates. Expectations of growth moderation going forward also hurt the stock.
Business updates from Marico and Godrej Consumer Products point to early signals of a likely improvement in demand. FMCG stocks rise on the queue.
And tire stocks run up on a decline in rubber and crude prices, while oil marketing companies perk up on a sharp fall in crude rates overnight.
Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar, and with me as always is my co-anchor Pavitra Parekh. So Pavitra, the weakness again continues in the market. In fact, important to note that 18,000 level has also been left by Nifty 50 at the moment, almost at the low point of the day. Nifty 50 with more than 0.5% cut at the moment. It opened, remember, in the green above the 18,100 level, so about over 100 points lost at the moment. Sensex, that too lost 440 points. It's the bank Nifty which is really taking the charge when it comes to the gloominess and the weakness in the market, and almost 1% down on bank Nifty, and some of the big banks are also weighing heavy on the indices today. Mid caps very resilient, flat to negative is the approach at the moment. It's also, remember, the weekly F&O expiry, and that's also weighing on the market, apart from the various macro uncertainties that have spilled over from the last year, added with the COVID pressures that are really emerging. So advanced decline ratio on the weaker side, and on my screen, what is clearly showing out as a resilient pocket is the consumer discretionaries. The demand aspect was weighing on the sector, but today they're coming back in gusto. So at the moment, Britannia, HUL, ITC all doing well, and some of the auto parts are also, auto companies are also showing good amount of gains today, Pavitra.
Oh, absolutely. And like you mentioned, the banks are doing the worst, but doing quite poorly in trade today. But what is absolutely the worst is the Bajaj twins. Bajaj Finance will come up for you. It's down around 7% after that update came through, where they have missed estimates on the AUM front. So the street is just not having it. Bajaj Finserv also, of course, as a rub-on effect falling. You have even some of the smaller banks which are seeing cuts. So quite a reversal from what we have been seeing in terms of the FMCG names. In addition to the ones that, came through with their updates, some of the other names also will be up on your screen, and those ones are seeing good momentum. As far as the auto pack goes, we were also talking to the management of Aisha this morning, and they're saying that there is even more room in terms of a demand recovery that we're seeing in buses and in commercial vehicles. So that is good news for the auto space, and also that they're trying to pull back on discounting. So all of this will really bode well for the sector. That's what's going on across the markets, and the key monitorable perhaps from here could be what's going on with crude prices at 78 and falling 7% overnight. It's good news for India, but let's really see how it moves from here. So that's what's going on with the market action, but let's get straight to the top story. Like we told you, Bajaj Finance and Finserv are, the top losers on the Nifty today. Remember, Bajaj Finance reported its third quarter business update last evening. So Abhishek joins us to fill us in with all of the highlights and to also tell us what brokerages are making of the update. Abhishek?
Well, Pavitra, as you mentioned, they gave a business update wherein they mentioned that the Q3 FY23, the AUM growth is 27% on a YOY basis. However, brokerages are not happy with that. They are saying that this is below the estimate. They also say that customer addition remains strong and the number of loans booked is in line with their estimate. So it's perhaps a quarterly high in terms of number of loans booked by Bajaj Finance. However, growth sequentially, that is Q3 over Q2 in the last 10 years, this time around is the lowest ever. So festive season has not been a cheerful season for Bajaj Finance this time around when compared to last 10 years. So AUM growth is the slowest over there, just about 5.7% growth that you are seeing. So either there was a festival impact at the end of 2Q, or there was some lost market share over there in Q3 is what Bajaj Finance has seen as per brokerage estimate. So brokerages do see loan growth moderating going ahead. We have Macquarie, who have an underperformance rating with a target price of 5275 per share, and we also have CLSA, who has a sell rating with a target price of 6000 per share. Back to you.
Right, Abhishek, stay on. RBL is also buzzing in trade today, up 2%. In fact, quite a contra move to most of the banking stocks and especially the big ones. And this after a strong third quarter update, while the RBI has also lifted restrictions on the recoveries via outsourcing for M&M Finance. Tell us more about the update as well as what lies ahead for the investors in this company.
Well, Nisha, the loan growth is perhaps the best that RBL Bank has seen, both YOY and quarter-on-quarter in last 3 to 4 years. And unlike peers or many other banks who are seeing a decline in CASA ratio or the low-cost deposit ratio, they have witnessed an uptick in the CASA ratio, which is at all-time high. So, talking about deposit growth, YOY, it's the best growth that they are seeing in last 5 quarters, up about 11% YOY. And sequential growth of 3% is the best in last 3 quarters. The loan growth at 14% YOY is the best in last 12 quarters, and about 5.8% growth that you are seeing sequentially is perhaps the best in last 15 quarters. The CD ratio or credit to deposit ratio, that's improved both YOY and quarter-on-quarter. In a rising interest rate scenario, if your CD ratio is improving, this would suggest that you can command a better net interest margin in the coming quarter. So CASA ratio or the low-cost deposit ratio, that's an all-time high of 36.6% when compared to 36.2% in the previous quarter. Talking about MMFSL, RBI had directed the company to cease, recovery process in the month of September via outsourcing arrangements. So this restrictions has been lifted with immediate effect. Now, restriction has been lifted after the company updated RBI about the recovery practices and outsourcing arrangements that they have changed. They have also tightened the process of onboarding third-party agents, and they have strengthened the accountability framework as per board approval. So this has gone down well with RBI, and RBI has lifted the restrictions of recovery process for MMFSL. Back to you.
All right, Abhishek, thanks a lot for getting us all of those updates from the financial space. But the one pocket of, pocket in the market which is really seeing good strength today is the FMCG stocks. We had Marico and Godrej Consumer, which put out their Q3 business updates as well. So Mangalam is here to take us through the details. Mangalam, how's it looking?
Well, there was resilience in the FMCG sector in today's trading session, and that's primarily because of a couple of updates that we got, and they do indicate that things are perhaps easing out for the FMCG sector. Marico, for instance, says that the India business for them grew at a mid-single-digit volume growth. This after the first half where they saw volume declines as well. Consolidated revenue for them grew in single digits, and gross and operating margins are expected to improve both year-on-year as well as quarter-on-quarter. So that would come as some bit of relief. They expect a modest growth come by in operating profit as well. Looked at it independently, these aren't numbers which would meet great shakes, but after what the sector has gone through in the first half of this year, these would come as some amelioration or some balm. They believe that, the premium personal care business witnessed double-digit growth, while Parachute did okay-ish sort of growth. Saffola franchise grew in double-digit. It's the value-added business which did not do too well, and that points to some pain in rural demand already. And that is something that was mirrored by Godrej Consumer as well. They said that, this was a quarter where we saw poor rural consumption and a slowdown post the festive season. However, despite that, the three problems that Godrej Consumer had earlier was weakness in the India business, weakness in Indonesia, and some contraction in margins. All of that seemed to be, bottoming out this time around, because the India business has shown double-digit sales growth, and that coming in on the back of low single-digit volume growth, double-digit sales growth in both their home care as well as the personal care divisions. Indonesia, the business has started to see gradual recovery in performance, so that's a positive, whereas the momentum for their Africa business continues. They believe gross margins will recover this time, and all those savings, they will invest back in marketing. So as a result of which, EBITDA is likely to grow in high single digits. Now the question, what happens to rural economy going forward, given the weakness that we've seen in the first 3 quarters of this financial year? There are a few triggers out there as well. December saw some easing in inflation, and as a result of which, there were green shoots of growth there. And that could be one of the bigger triggers. Higher crop realizations is the other one. There are ongoing government interventions which is going on as well. And finally, we are talking about, just pre-budget conversations. So any likely stimulus coming in from the government in the union budget could also prove to be a trigger for rural economy.
I'll take that last point very, very emphatically just ahead of the budget, whether government will do enough to boost consumption in the economy, because consumption and demand is one of the big worries and spot of bother for this entire year. But consumption stocks doing well today. Thanks so much, Mangalam, for that roundup. Now on to the tire stocks. They're also doing extremely well. CEAT, Apollo Tyres, Balakrishna Industries all are gaining as the prices of crude as well as rubber fall. Now, in fact, my colleague Sonia Shenoy joins in and rounds up the action from the tire maker space. Sonia.
Well, thanks a lot for that. As you rightly pointed out, tyre stocks are doing very well this afternoon. In fact, Apollo Tyres is sitting at a fresh 52-week high. You have others like Balakrishna and CEAT that are seeing big moves as well. Now, it's a double positive for them. On one hand, raw material prices are falling. On the other hand, demand has picked up across key segments like passenger vehicles. Now, if you look at raw material prices, as you rightly pointed out, both crude and rubber prices are under pressure. In fact, rubber prices are down 24% from the April 2022 highs, and crude prices are down 10% in just 2 trading sessions. And now crude prices are 40% lower than what we saw way back in June of 2022. Now, crude and rubber together make up 70% of the raw material costs for tires. Hence, there's a big operational benefit over there. Natural rubber itself is just 50% of the overall cost for them. Carbon black is around 14%, and NTCF, which is nylon tire cord fabric, which is used in the construct of tires, that constitutes about 12%. And even within that, both carbon black and the fabric use crude as input. So there is a further positive for these companies. In fact, many of these companies like Apollo Tyres have been showcasing an improvement in margins over the last many quarters, and brokerages believe that it will only get better for them. So Apollo Tyres, for example, in the past 3 quarters has seen an improvement from 11.2% margins in Q4 of FY22 to about 12% in Q2 of FY23, and the expectation is that the margins will further improve. Hence, these stocks are surging today. Back to you.
All right, Sonia, thanks a lot for getting us all of the details and explaining why the tire stocks are up and about in the trading session today. But with that, it's time for our first short break on the show. On the other side, sources are telling us that Kumar Mangalam Birla met with Telecom Minister Ashwini Vaishnav. So we'll bring you more details on that story when we come back. Welcome back. You're still tuned into Business Lunch. While for the broad index, there's no real, respite that we are seeing right now. We're still seeing a near 100-point cut. It is the mid-cap index which has moved back into the green. So do keep your eye out on that. No big move there, but it is around 15 points higher. The mid-cap index moving back into the green. But let's bring you an important story now. Sources are telling us that Kumar Mangalam Birla has met with the Telecom Minister Ashwini Vaishnav to urge the government to convert Vodafone Idea's license fee as well as spectrum dues into government equity. So Ashmit is here with the details. Ashmit?
Well, this has been an issue that we've seen a stalemate over the last 15-odd months. Keep in mind that it's in the month of September of 2020 is when the 2021, I beg your pardon, is when the cabinet had in fact gone ahead and approved this equity conversion scheme, and since then it has been a waiting game, especially as far as Vodafone Idea is concerned. Keep in mind that the government had secured all the necessary approvals by about May of 2022, which is last year. SEBI had approved, the Finance Ministry had approved, but the wait continues, and that seems to have been on the agenda when Kumar Mangalam Birla entered into a conversation earlier this week with DOT officials, with the DOT minister, with very clearly the agenda was to nudge the government closer towards taking action on that decision to convert the government dues into equity. Now, the concern, however, that the government has reflected is that the government has repeatedly shared and has in fact impressed upon the promoters on the need to infuse further funds, and that was in fact a concern that was shared once again with Kumar Mangalam Birla. Not just that, what was also shared with him was a very clear view of the government that any decision to seriously consider this equity conversion and then to subsequently act on it can only be done in case of further fund infusion by the promoters. Now, that is something to which the promoters haven't really had an answer over the last few months. Kumar Mangalam Birla, again this time around in this round of meetings, has not conveyed any timeline on when or how the funds can be raised and deployed with Vodafone Idea. So no commitments coming in from the promoters either. So the stalemate essentially continues. Both the sides have conveyed their concern. They're waiting for the other party to proceed and to take the first step. But clearly, both the parties are waiting for the other side to perhaps take the first step. The centre waiting for the promoters to infuse funds. The promoters, on their part, waiting for the government to convert dues into equity, which will then enable them to raise funds with the investors. So stalemate continuing for Vodafone Idea.
Extremely important story there, Ashmit, considering that, we need a three-player market when it comes to telecom. And despite all that the government had given in terms of package and relief, it still continues to be a spot of bother when we talk about Vodafone Idea. Thank you so much. We'll keep that on our radar. Moving on then. New year, old problems as layoffs continue in the tech sector. Well, Amazon, which is the largest employer in the United States, will hand over pink slips to 18,000 employees in the month of November. Now, the expectation was that the tech giant would lay off 10,000 employees. But now that the number will be much more at 18,000 people, well, Salesforce, another tech giant, plans to cut jobs by 10% and close some of the offices. Now, the company's chairman and CEO, in a letter addressed to the employees, said, and I quote, "As revenues accelerated through the pandemic, we hired too many people, leading into the economic downturn, and we are now facing, and I take responsibility for that." Even as we get answers to that, well, the next 2 years are expected to be challenging for the tech sector after the pandemic-fueled growth. This is what Microsoft CEO Satya Nadella had to say in his conversation with CNBC-TV18's Shireen Bhan. Let's listen in.
Many CEOs are now talking about having to respond to the new economic reality. What is that going to mean, not just for Microsoft, but for the tech sector in general? Are we likely to see more pain, especially when it comes to retrenching, downsizing, margins going to be under pressure, guidance going to be a downside risk to that as well?
I think overall, quite frankly, whether it's for us as Microsoft or the tech sector, it's going to be very, very important to look inside and say, are we as efficient as we need to be competitive? I mean, at the end of the day, just because we are a technology company doesn't mean that we are the most efficient at what we do. And so as the paradigm has changed, as the bar has risen, we have to measure ourselves with the new bar. So definitely and also the growth picture has changed, we have to have operating expenses that need to be aligned. So definitely we are going to look at all of that, and it means that we're not sort of immune, as I said, to the global changes. But the one interesting thing to your point, though, is tech industry employment is not tech employment. Yeah. That, I think, is the key divergence that needs to be well understood, because that, I think, is positive, by the way, for the tech industry long term. Because if you look at it, overall tech jobs has actually increased. The tech jobs now are coming in financial services, in energy companies, in retail, manufacturing, and that's healthy, because in the long run, all those employees in all those industries are going to consume more tech infrastructure, right? When we think about our cloud business, long term we're bullish because of the fact that there's more employment outside of the tech industry of technical talent. And so that's, I think, what we are banking on.
No, I think you underscore the labor market resilience aspect. But, what we've seen, especially as far as the stock markets are concerned, and I know that CEOs often say that don't focus on what the markets are telling you, but they seem to be suggesting that there is significant pain in store for the tech sector. How do you read what's happening with the way that the markets have corrected, specifically the tech stocks, and what that signals?
For me, look, I'm never the one who would ever say ignore the market, because the markets are smarter than us all. I think they are reflecting on is, look, where is the growth coming from? And how should we think about normalizing for that growth? And so I think stock performance, economic performance are not exactly the same. But the key for us as a tech industry, I always go back as a percentage of GDP. The simple question to ask is, do we think tech spend will increase or decrease? If we believe software and digital infrastructure is going to be important in construction, in energy, in manufacturing, long term, then you have to be long on tech industry. But will we have to go through our own cycles around productivity? Absolutely, like anybody else. But that's at least my perspective. I wouldn't look, the only reason why I would say ignore the short term is because in the long run, we would be fine with demand. But in the short run, what we have to focus on is our own productivity and making sure we are at the efficient
How
frontier.
would you quantify short term and long run?
I would say the next 2 years are probably going to be the most challenging because after all, we did have a lot of acceleration during the pandemic, and there is some amount of normalization of that demand. And on top of it, there is a real recession in large parts of the world. And so the combination of pull forward and recession means we will have to adjust. and that'll cycle through the demand cycle and in fact come out of it with what can be another massive growth cycle for the tech industry.
Very interesting chat there with Satya Nadella, but we also have to cut into an important roadshow in Mumbai by Uttar Pradesh Chief Minister Yogi Adityanath for the Global Investor Summit 2023. Let's go across.
इन्वेस्टर्स और उपस्थित सभी भाइयों बहनों, मैं उत्तर प्रदेश शासन की ओर से आप सबका हृदय से स्वागत करता हूं। उत्तर प्रदेश भारत का हृदय स्थल है। भारत की आध्यात्मिक और सांस्कृतिक विरासत का प्रतिनिधित्व करता है और उस प्रकार की प्रकृति और परमात्मा की असीम कृपा वहां पर है भी। भारत की विरासत की जननी के रूप में आप उत्तर प्रदेश को देख सकते हैं और इसलिए 25 करोड़ की एक विशाल आबादी को न केवल एक साथ समेट करके आगे बढ़ाती है, बल्कि आम जनमानस जो अपने रूट्स को भारत के अंदर ढूंढने का प्रयास करता है, तो उत्तर प्रदेश वह भूमि के रूप में उन सबके सामने एक उज्जवल भविष्य की तस्वीर प्रस्तुत करते हुए दिखाई देता है। और उस उत्तर प्रदेश की धरती से आज आप सबको आमंत्रण देने के लिए मैं विशेष रूप से देश की इस आर्थिक राजधानी में आपके बीच में आया हूं। आप सब उत्साह के साथ यहां पर आए हैं, ये मुझे आनंदित भी कर रहा है और हमारी पूरी टीम को आगे बढ़ने के लिए प्रेरित भी कर रहा है। मित्रों, हम सबके लिए यह अवसर अत्यंत महत्वपूर्ण है, क्योंकि इस देश ने अपनी आजादी के अमृत महोत्सव को अभी मनाया है। अमृत महोत्सव का जो प्रधानमंत्री जी ने हम सबके सामने जो पंचप्रण की बात की है, हर भारतवासी ने पहली बार देश के आजादी के इस उत्सव के साथ जुड़ करके एक भारत श्रेष्ठ भारत की इस परिकल्पना को आगे बढ़ते हुए देखा है। हर घर तिरंगा उसका एक उदाहरण है। आपने देखा होगा सुदूर गांवों से लेकर के उन वनवासी क्षेत्रों में भी तिरंगा लहराता हुआ दिखाई दे रहा था। यह इस नए भारत की वह तस्वीर है जो हर भारतवासी को जाति, मत, मजहब, क्षेत्र, भाषा से ऊपर उठा करके विकास की एक नई आशा उसके मन में एक नए उमंग के साथ जगा करके आगे बढ़ाने के लिए प्रेरित करती है। और इस देश के यशस्वी प्रधानमंत्री जी के नेतृत्व में जब हमने आजादी के अमृत महोत्सव को मनाया है।
All right, so that was an important comment and from the summit, but we need to focus on the market. There's a sudden drop in the markets. In fact, racing towards a 1% loss when we talk about sensex. 550 points lost on that one. Nifty 50 now trending at 17,900 level, and Bank Nifty is the one which is with speed really going down towards 1.5% cut, 1.4% down at the moment on Nifty, Bank Nifty, and that's what you need to focus on. In fact, take a look at Reliance Industries, some of the big banks, HDFC Twins, Axis Bank, ICICI Bank, all falling at the moment. So market looking extremely weak, but mid-cap radar is going to take forward all the market action for you. With that, it's a wrap on Business Lunch. Thanks so much.